Hi friends, good evening. This is Sachin Nachnani welcoming you back to my YouTube channel where I provide updates on option chain analysis on a regular basis, and I also share important updates to help you become better investors and traders. Do subscribe to my YouTube channel and don't forget to click the bell icon. Now, let's do the option chain analysis of Nifty and Bank Nifty for tomorrow, that's 14th July. In my last video on option chain analysis, I had suggested certain strategies on the put side as well as on the call side. To know the exact details of those strategies, check out my video, the link for which is given above. Nifty today closed at 10,803, just above the 10,800 mark, while futures today closed at 10,808. So that's about a premium of 5 points. Nifty continues to be calls heavy, but just marginally. On the put side, the highest open interest and the highest open interest addition has taken place at 10,700, while the next highest open interest is at 10,500. Across all strikes, Nifty is witnessing open interest addition, including at 10,800, which is at the money strike. By the way, for people who don't understand, at the money strike would mean the strike price, which is the closest to the current level of Nifty futures or even Nifty spot for that matter. On the call side, the highest open interest continues to be at the 11,000 level, which is where the highest open interest addition has also taken place. The next highest open interest is at 10,900 level. What is important to note is that at 10,800, some bit of call winding has taken place. It means that call writers are afraid to short at the money call option, whereas the put writers are not afraid to sell at the money put option. This is an important thing to note today. Let's have a look at the charts. An important thing that happened today was that Nifty managed to touch the 200 DMA mark, although it closed lower than that. Yet, it has not broken Friday's low, and of course, it is way ahead of the 10,600 support level. So, this is what I have been calling the congestion zone, which is where, despite facing resistances again and again, Nifty is refusing to come down. This, in my view, is showing a decent amount of strength. I won't be surprised if Nifty manages to cross and close above the 200-day moving average very soon. So broadly, as we have seen, the picture remains the same, where 10,600 continues to be a very strong support level and 11,000 is a strong resistance level. However, this week there is an important event which is scheduled to take place on Wednesday, that is 15th of July. And I am sure that as an active trader, you would be aware that it is going to be the AGM of Reliance Industries. This will, of course, be the first AGM of Reliance that will be held virtually. But the important thing to note about Reliance is that it is at an all time high. It continues to be strong with very good amount of positive news flow on a regular basis, and it has a habit of surprising in its AGMs. So, depending on the announcements made in its annual general meeting, it can also dictate the Nifty trend. Advise all investors and especially traders to be cautious if you are planning to short Nifty. Like I have mentioned repeatedly before, that 10,600 is a very strong support zone, and only below that will there be opportunities to short Nifty. Don't try to short Nifty as long as it remains above that level. And as we are seeing repeatedly, Nifty continues to march higher. So on this basis, what will be my strategy? Since 10,600 has remained a strong support level and Nifty continues to march higher, I will now sell 10,600 puts, which is still around 200 points away from the current level of Nifty. So that provides me a decent cushion for the next 3 trading sessions. And as a measure of safety, 10,400 hedge can also be taken. So effectively, if you sell 10,600 put, you will get a premium of 21 rupees, while buying the hedge will cost you around 6 and a half rupees. So effectively, you will be getting a net premium inflow of 15 rupees for the next 3 trading sessions. Aggressive option traders always have the option of selling the 10,700 put, since that has the highest open interest, and also because 10,800 has witnessed very high amount of put writing, as well as it also has high open interest, but you have to be very cautious in doing so. On the call side, continue by selling 11,000 calls, which has the highest open interest, and you can always take a hedge by buying 11,150 or 11,200 calls depending on your risk appetite. But please note that as and when Nifty closes at or about 10,900 level, then square off the 11,000 calls at whatever level it may be trading. This is primarily because of the fact that Nifty continues to march higher, even though it is in the resistance zone, but closing about 10,900 can signal that Nifty intends to go or at least touch the 11,000 mark. So it is best to be cautious, like I mentioned before, while selling Nifty call option of 11,000. Now let's have a look at Bank Nifty, which closed at 22,089, down by 309 points. However, Bank Nifty future closed at 22,174, which is actually at a premium of 85 points. Now this is really very interesting because in the last few days, Bank Nifty has turned from a discount to a premium of around 85 points. Bank Nifty continues to be calls heavy, but the proportion of calls is far too much as compared to puts. It is almost at a ratio of 2:1, which shows an excessive amount of bearishness in Bank Nifty. But with a premium of 85 points, I believe that there may not be too much of a downside in Bank Nifty, considering that a lot of weakness has already been priced in the immediate term. On the put side, the highest open interest is at 22,000 level, followed by 21,500 level, which is where the highest amount of open interest addition has also taken place. While on the call side, the highest open interest continues to be at 23,000 level, which is where the highest amount of open interest addition has also taken place. And after that, the highest open interest is at 22,500, and highest amount of open interest addition has also taken place at that level. Call writing has taken place across all strikes in Bank Nifty on the call side. On the put side also, there has been open interest addition, though the quantum is not as strong as on the call side. Let's have a look at the charts. So Bank Nifty, as we saw in Friday's session, closed below the 22,500 mark, and today there was a follow on as Bank Nifty closed down by around 1.4% and ended just above the 22,000 level. But the volumes have been fairly low. So basically, looking at all these factors, as long as Bank Nifty remains below 22,500 mark, it will continue to exhibit weakness. But looking at the option chain build up where too much of pessimism has already been priced in, I believe that the downside may not be much. In fact, it could be limited. And Bank Nifty may not fall below 21,500 in this weekly series. In the last video, my strategy was to sell 100 call, which has come down substantially today. And obviously, I was not selling anything on the put side because I was expecting Bank Nifty to exhibit weakness. And it has worked out on expected lines. I'll continue with a similar strategy where, although I feel that Bank Nifty may not fall below 21,500 because of the factors which we discussed, however, I will avoid the temptation of selling any puts over here because Bank Nifty has been a relatively weak index as compared to Nifty, and even the slightest of decline in Nifty triggers a much larger fall in Bank Nifty. In fact, even today, Bank Nifty was negative while Nifty was positive, though largely helped by Reliance. So on the call side, now I will sell 23,000 calls, which has the highest open interest, and the premiums are around 93 rupees, and it is almost 900 points away from the current closing of Bank Nifty. So that provides an ample amount of cushion. For safe traders who want to hedge their position, you can always buy 23,400 call option, which is trading around 40 rupees. I'll continue to hold the 23,000 call short position as long as Bank Nifty remains below 22,500 mark. Once it crosses the 22,500 mark, I may square off my 23,000 calls on the short side and take a different position based on the market conditions at that point of time. So that's it from my end. Hope you have a profitable week ahead. Do take very good care of yourself, your family, and as I always say, stay home, stay safe, and gain knowledge. Thank you.
Do like and share this video, subscribe to my channel and click the bell icon. You can reach out to me on Twitter, Insta, LinkedIn and of course YouTube.